Gold,
Yeah.
for people who haven't held it, gold is really, really, really dense. It's much, much, much heavier than it has any right to be. Something the size of this mobile phone. This is a Galaxy, what do they call it, S25 Ultra, I think. This would be like 2 kilos of gold.
Wow.
It's much heavier than when you hold it, it's astonishingly heavy. So if you look around the world, there are a lot of major regions where people are buying gold, not primarily because they're worried about the dollar, but primarily because they're worried about their own government and their own currency. So we lease where there's a physical inventory and where we can verify that at all times, if let's say we lease 1,000 ounces to a company, that we can prove on a daily basis there's 1,000 ounces physically present. You could scrape it up, put it on a scale, and it would be greater than 1,000 ounces.
Hello and welcome to the MoneyMagpie Invest podcast. I'm Jasmine Birtles, founder of MoneyMagpie.com. And before I start, you do need to know, as always, that nothing that we say today should be taken as financial advice. It's financial information. You do your own research. Also, if you haven't yet subscribed, why not? You need to subscribe, press that button, certainly follow us. Oh, and do comment. Oh, and like, of course. But when you comment, I do always read the comments and I do reply. So do comment. And of course, tell all your friends how fabulous we are. Now, speaking of fabulous, today I have with me the CEO of an American company which does operate in Britain called Monetary Metals. It's Keith Weiner. Hello, Keith.
Hey, Jasmine, how are you?
Great, thank you. Thanks for coming on. I asked you to come on because I recently found out about monetary metals and I thought, different. This is interesting because it seems to me that your the main thrust of the company, the point of what you do, is that you do what people complain that gold doesn't do. You actually give a return, a monthly return on gold holdings. Am I right in thinking that?
That's right. We pay interest on gold.
So how does it work then? And how much interest can you get on your gold?
Current rate is 4%, though it's a market and that can move around. And what we do is lease the metal to businesses that use physical metal as either inventory or work in progress. So think of jewelry manufacturers, jewelry retailers, refiners, mints, recyclers. When you're done with your old mobile phone and you bring it to the store, there's a variety of different companies that, want bits of it. The glass is worth something. Of course, the lithium ion battery is worth a lot. And then the circuit board has a bit of gold on it because they use gold for the circuit traces. So their recyclers will buy that by the shipping container full, grind it up or burn it or whatever, extract the metal out of it, which is mostly copper, but by volume, but mostly gold by value. And those things they pay a fraction of the gold value in it. So we lease where there's a physical inventory and where we can verify that at all times, if let's say we lease 1,000 ounces to a company, that we can prove on a daily basis there's 1,000 ounces physically present. You could scrape it up, put it on a scale, and it would be greater than 1,000 ounces. Now, of course, they pay for the privilege of the finance, and we take a fee and pay the owners of the gold, the 4%.
So if I happened to have, just knocking about, I had a few bars of gold, maybe I've got $1,000 worth of gold, me personally, would I then send it to you? Or do I actually buy the gold off you and then you lease that? How does it physically work?
We'll do it both ways. So if you open an account, we can accept a wire, transfer, or we can accept, physical metal. Now, of course, $1,000 worth of gold would not be a few bars. That would be a quarter of an ounce. Gold,
Yeah.
for people who haven't held it, gold is really, really, really dense. It's much, much, much heavier than it has any right to be. Something the size of this mobile phone. This is a Galaxy, what do they call it, S25 Ultra, I think. This would be like 2 kilos of
Wow.
gold. It's much heavier than when you hold it, it's astonishingly heavy. So, a quarter of an ounce of gold would be, the size of, an old pence coin or something like that. Not a lot, But minimum account size is 10 ounces. So we're not looking for those really small deposits at this stage. But yeah, you can send in metal. We have a network of vaults, including Brinks and Loomis globally, and others. So we can make that fairly convenient, and we'll work with you to provide white glove service to get it to the nearest vault.
So, say I had a Galaxy phone size of gold or whatever, I can send that to you, and then I say, well, you keep it for a few years, and every month or every year, I'll get 4% of what that metal is worth, and then at the end of the few years, I can get that metal back, can I?
You can get your deposit back either as physical metal, or if you want us to liquidate it, we'll send you a wire of funds.
Mm.
Okay.
And when it comes to the 4% return that you're getting, at the moment, as we're seeing, gold is going up really quite fast. So if I sent you, a load of gold a couple of years ago, it would be worth a lot more now. So the interest that I get, that'll be going up, will it? Or is it fixed on when I
It's
send it in?
the interest is denominated in metal. So if you sent 100 ounces of gold, you're getting 4 ounces a year, and those 4 ounces are worth more dollars and more pounds and more euros than they were, 2 years. It's about double what it was 2 years ago, at least in dollars.
Hi, I'm going to quickly interrupt this amazing podcast to let you know that Money Magpie Invest has a bi-weekly newsletter where we share tips, tricks and insights to help you become a more confident investor. Our newsletter is completely free to sign up to, and it will arrive in your inbox on Saturdays at 12:30 p.m. As well as all of the super useful investing information, we also share exclusive deals from our partners. So if you're serious about building long-term wealth for yourself, I really recommend signing up. And you can find the link in the description of this podcast.
So I am getting more. I will get more money because the interest is on a higher amount.
That's right. That's right. It's all physical metal, and the dollar value of that is going up right now.
I'm just trying to think of a downside here because it's. I guess it means that you have to give the money the gold for a certain amount of time. Or can I after 6 months go? Oh, I need it back. Is that all right? Can I have it back?
So there's always risk. Otherwise, there's no such thing as return without risk, and there are broadly two risks. One is liquidity risk. If you have a financial need for that, the leases are typically 1 year. So during the lease term, no, you can't get it back necessarily. And the other is risk of loss. Now we try to do everything we can to identify what's the risk that the gold could disappear. Could it be stolen? Could it be nuclear war? Could it be, whatever? We make let's say the jeweler has a jeweler's block insurance policy to cover most, someone smashes and grabs, that's what fire, flood, that kind of thing. And then we have another policy to cover what if there's a gap, what if there's, a problem that the first policy doesn't pay. But there's no such thing as perfect. There's no such thing as zero. We try to get it as close to zero as we possibly can, but it isn't zero, and there's a risk of loss. So those are the two, those are the two catches. Those are the two downsides. Some people will say, I just want to hold my gold close to the vest. I'm not giving it up. And, and our response to that is, yeah, sure, that makes sense. Everybody should have a little bit of gold in the sock drawer, as it were. But what are you doing in the rest of your portfolio? Is that full of cryptocurrencies and stocks and bonds and all sorts of other conventional paper assets? In which case, consider, displacing a little bit of that with an additional bit of gold that is gold with yield versus gold that, you just hold it at home.
So what would you say are the pros and cons between what you offer, the sort of interest on gold, as opposed to, you can get 4% fairly easily on a savings account, for example, in this country, for example. So I could maybe get myself a cash ISA that gives me 4% on fiat currency. What would you say? Why would somebody go to you rather than do one of those savings accounts?
Well, the savings account, you're going to get back your sterling in nominal terms because there's a government guarantee. I don't know what it is in the UK. In the US,
85,000.
85,000. In the US, nominally it's 250,000. But when Silicon Valley Bank failed, it turns out actually it was unlimited, or at least for that particular bank. I don't know
Yeah.
that anybody could count on that for the next one. So there's a guarantee of the government that you'll get that back in nominal terms, but what is a nominal pound sterling going to be worth? It's clearly going down. Is it going down at faster than the rate of 4%? Maybe, possibly, and will go down faster tomorrow than it went down yesterday, possibly. What we're doing is denominated in gold. There's no such thing as monetary policy for gold. There's no such thing as gold debasement, gold inflation. It is what it is. And I'd say that's the most important difference. 4% on gold is not equivalent in any way to 4% on paper.
No, it's because it sounds to me that, well, it's likely, and I'd be interested to hear your view on this, but it seems likely that gold is going to continue to go up. I mean, we keep being told, oh, it's hit, its peak, it's hit its peak. We keep being told it's hit its peak, and then it goes further. Do you feel that that gold still has quite a long way to go in terms of its value?
I do, because if you look around the world, there are a lot of major regions where people are buying gold, not primarily because they're worried about the dollar, but primarily because they're worried about their own government and their own currency. And I specifically refer to India, Turkey, China, and the Arab lands. And the Arabs are the only ones that are buying it out of any kind of concern about, U.S. policy, U.S. dollar. The others are buying it because the Turkish lira is potentially facing imminent hyperinflation. The Indian rupee, it's not really hyperinflation, but it tends to go down about 8% a year against the dollar over long periods of time. And the Chinese yuan, I think, wants to go down big time, but the Chinese government is trying to prop it up. So the
Yeah.
Chinese people are trying to desperately escape it, and they buy dollars when they can, and they buy gold as their defense mechanism.
That's interesting. And now, I did mention earlier that you're an American company, but you operate in Britain, among other places. So if people send you their gold or they invest in gold in the UK, is there going to be an element of difference when it comes to the dollar and how the dollar relates to the pound, or is it entirely British? It's all UK to UK, and there's no element of the dollar.
I mean, we don't have a British office per se, but we're happy to take British clients. Everything we do is denominated in gold, which is a universal cross-border. Gold is gold, right? You don't have to say how many dollars is it worth. If you think in pounds, it's the same. Now, at the moment, our ability to accept currency is limited to dollars, so you have to use a service like Wise or somebody that can exchange pound sterling for dollars. Or if you have physical gold, we have vaults in the UK in London that you can send it to and get it into the program.
And so somebody who, say, puts their gold bars or their gold jewelry or whatever into your vault and says, I'll have 4%, thank you very much, they'll get it in pounds, will they? Or will they
Well,
get it in dollars?
they get it in gold, and then
Oh, oh,
at the end, we'll return the physical metal, or we can send a wire of dollars at the moment, which we can, of course, exchange for pounds at the then prevailing rate. We are working on, but this is not a feature today, the ability to do other currencies direct, but that's not set up today.
I see. So I'm getting a clear now. Yes, I didn't have a clear sense of this. So what you're saying is that people are paid in gold from their gold. So the interest is paid in gold. So that basically compounds.
That's right.
Unless you want to take it out, which I mean, probably most people wouldn't, that gold compounds. So you've got more and more gold, and let's hope the price continues to go up. So you've got a compounding amount of gold plus an increase in value. So it's a double whammy.
That's it. That is the point right there.
Clever.
Thank you.
And do you have a lot of clients in the UK at the moment, or is it something that's quite small but growing?
It's somewhere in between. I'd say 60% of our clients are US, 40% are rest of world. Of that 40%, there would be a high, disproportionate of Anglosphere. So UK, Canada, Australia, New Zealand, in particular, and then other ex-British colonies, Singapore, as an example. Everything we write and publish, we have a lot of content. It's all in English. And so, if you're German, we do have clients in Germany and France and Italy and Spain, but those tend to be the ones that are fluent in English because we haven't really set up marketing in those in those languages yet.
And we've mentioned insurance, particularly with the jewelers, etc., your end users, if you like. What other guarantees, what other protections do the investors have?
Well, a lease is not a credit. You're not lending the gold hoping somebody will pay you back. It's your metal, but you're allowing that metal to change form and change location and be in the possession of somebody else. So the first is, should the lessee go bankrupt, it's still your metal. That metal is not available to satisfy their creditors. So that's a very important protection. Number two is we get inventory reporting daily. So that's from their computer system to ours. And in many cases, there's a third party monitoring it using RFID technologies that we get third party reporting as well. And then, finally, there's, audits and inspections. We have the right to come in on premises and, count it, weigh it, et cetera, or send in somebody on our behalf to do that. And all backstopped by, another insurance policy at the end of the day.
So if monetary metals fell apart, suddenly it all went bankrupt, our gold is still there and we would still be able to get it. It wouldn't affect the actual gold that we have.
That's right. It doesn't, you're not lending it to monetary metals. It's not on our balance sheet. It's not our asset. The leases will continue, and obviously in some sort of administration, there'd have to be an orderly wind down. And again, you wouldn't get the gold instantly because the lease has a term, but that should be, wound down in an orderly way.
And we've got a link for people to click on just below here, so they can click on it and go and have a look at monetary metals and maybe put some money in, or some, put some gold in. Is there a limit, a lower limit that people have to put in, £1,000 or something like that?
10 ounces, which is roughly $42,000, and I'm not sure what that is in pounds. That's got to be what, 35.
Fine, yes. So, okay, so there is a minimum investment of about £35,000 worth of gold. Yeah. Okay. Yeah, that's the thing, because about 2 years ago that it would have been half that if it was 10.
That's the challenge. And a lot of people say, "Will you lower the limit?" We're thinking about it. We want to make sure we can provide white glove service. So we're careful about that, but we may, watch the news if that's too much for you, but you're interested, watch this space. We may lower it.
Do you have a newsletter or anything that people can subscribe to?
Yeah, on the website, you go and click to say you want to follow news updates and other things. We do the full slate of marketing blasts and all the stuff. You get as much as you want. So
you've got a minimum of, let's say, 35,000. It's covered in various insurances. Even if monetary metals falls apart, it's still going to be okay. Your gold's still going to be okay. You get paid 4%, and that can increase as the price of gold increases, and it compounds because it's added and added and added. And it's flexible. You can pretty much take your money out when you want to. Am I right in thinking that?
Yes, as with the caveat that you have to wait till the end of a lease period. So typically what you do is you get into a portfolio of different leases that of course are up at different times. So if you say, okay, I want some gold, it's okay, the next one is coming up in November. And then you say, okay, I don't want to roll that. I want to take out, that amount. To get the full amount, it would generally run around the year.
And are there any fees apart from, are there any fees that you charge?
We do not charge fees to the owners of the gold.
Okay.
We charge fees to the businesses that lease the gold, but even that's fairly minimal. So, just to cover the cost of it. Yeah.
Okay, so 4% is net. There are no charges.
4% is what it is. That's right.
Great. Well, hey, Keith, it's a fascinating concept. I have to say, when I heard 4%, I thought, no, big deal. But when you think if it's 4% and that's paid in gold and it's compounding and it sounds like a really interesting proposition. And I'll be following your progress myself. It's quite fascinating. So if anybody, if you want to invest, or if you just want to find out more, click the link below, have a look at Monetary Metals. If £35,000 of gold is too much for you, then keep an eye on what's happening, because it sounds like they might be bringing it down. It kind of sounds reasonable to me, given the price of gold and right now, and as it's probably going to be. But Keith, thank you very much for coming on. Might get you back again another time, because this sounds like an interesting concept. And frankly, as far as I'm concerned, anything connected to gold is interesting.
Thanks so much.
Well, it's been Keith Weiner. Thank you, from Monetary Metals, CEO of Monetary Metals. If you're interested, as I say, click on the link below, take a look, and also comment. Tell us what you think, because I'll ask Keith to reply. If there are any comments that I don't know, I can't answer, I'll ask Keith or somebody from Monetary Metals to answer. So do put comments below. Don't forget to subscribe, follow us, tell all your friends how fabulous we are. And remember, nothing that's said here today can be taken as financial advice. It's financial information. This has been the Money Magpie Invest podcast. I'm Jasmine Birtles. See you next week.